The recording is on. Welcome everyone once again. In this session, we're going to have educational topics, two or three topics. We'll see how long does it takes. And after the educational topics, we'll just simply create a narrative for the upcoming days and for this week, like usual on the 4-hour chart, daily chart, 15 minutes, 5 minutes, 1 minute. And we're going to see through the possible movements that could happen on this week. And yeah, I just start with an educational topic because I just wrote a question down to the general chat and asked your opinion about what would you like to see in an educational topic, because mainly I just explained everything in the past few webinars. And for me, I couldn't see any more questions about, I don't understand this, I don't understand that. So I would just answer some of the questions you wrote down in the general chat. And one of the first question is from Whale. I hope I pronounce your name well. Is it Whale or Whale?
Wael. It is difficult for you,
Whale.
I think.
Whale?
Yeah.
Okay. So you asked this question several times, a long time ago. And I just said that basically it doesn't really require an educational topic or a further explanation, because your question was that platform challenges, that how you should prepare for a platform challenge, how you should treat a platform challenge, and what you should do, what you shouldn't do. Technically, it doesn't really require a further explanation, because you should simply treat the platform challenge, FTMO, my for experience, any platform challenge, like a demo account, like a real account. So there are no specific rules for these platform challenges, because there are drawdown rules. Of course, you have to respect those drawdown rules, but you have to calculate with the drawdown rules. I think you might be asking about the percentage that you should risk on platform challenges, and technically, okay, some few words. So before you apply for a platform challenge, okay, so here's, for example, you'd like to apply for FTMO. Here's FTMO. This is your end goal. Let's just talk about FTMO. This isn't sponsored. I'm not being affiliated by FTMO. I'm just simply bringing an example of FTMO because they are reliable. So your end goal is FTMO, right? You'd like to complete an FTMO challenge. Okay. First of all, the first FTMO challenge you'd like to take will be 10K. You don't want to risk 100K. You don't want to risk a 200K challenge. If you can't complete the 10K challenge on FTMO, you wouldn't be able to complete a 200K challenge. So you always start with the 10K. Okay, but let me just hide the video panels. Okay, so this is your end goal. Before you apply for this challenge, you have many things to do. First of all, what should you do before you apply for this challenge? First, you have to gather data. You have to gather lots of data. About your entry model, about your plan. So, we have a plan. We have a really, really fucking simple systemized trading plan. I just passed you the webinar. I just passed you the trading plan PDF, about what should you use, what criteria should you use. And I just passed it, how can you backtest these criteria and what should you do? This is the first step. If you haven't seen this, please just watch the PDF creating webinar. I believe that's the name. So first step, watch the PDF creating webinar. Plan creating webinar, and read the plan creating PDF. Every single necessary information is being written down in these PDFs and webinars. And after you watch those webinars and the PDF, all you have to do is actually assemble a plan for yourself. Assemble your base criteria, assemble your variable criteria, create a plan for yourself. And this is the first step. Create a plan. Okay, I won't use these. Sorry, just a text. It's easier. First, create a plan. Okay, but the plan itself won't be enough. It isn't enough. If you have a plan, you can't just simply start an FTMO challenge, because that won't be enough. You have to backtest this plan. You have to backtest this plan and backtest the shit out of this plan. How? It was being said in the webinar. It was being said in the... let me just open the chat. Sorry, it just closed. So it was being said in the plan building webinar that you have to gather data about the criteria. So for example, you collect 10 criteria. You have 10 criteria for a pro trend. You have 4 base and 6 variable criteria. You find these criteria very useful together, combined together. These are working. You have to find, for example, 50 or 100 traits about these criteria, and you have to backtest the shit out of these criteria, and you have to gather data from 100 or 50 traits. And you will see a win ratio for these criteria, but I just explained it several times. You will see a win ratio for these criteria, right? So you just gather data. So you have 10 criteria for a pro trend trade. You gather data about 100 trades with all of the exact same criteria on those 10 criteria on all of the 100 trades. And these 100 trades will have like 40% win rate. Okay, you have a really high win rate because 40% win rate is really, really high because, you know, we are working with huge restore ratios. And if you're having a 40% win rate, you're going to be successful and you're going to be profitable. So you gather data, you collect 9 criteria, 9 other criteria, or 10 other criteria that you like. You're going to gather data about this 10 other criteria once again for 100 trades. And those criteria will have, for example, like 53% win rate. Okay, this is much better than the 40%. You found the holy grail. You found the holy grail for yourself. And this will be a really, really good criteria combined together. Okay, you're going to use these 10 criteria combined together for your challenge, for your trading career, etc., etc., etc. But of course, you can implement more criteria into your trading plan. You can use these 10 criteria combined together, which have 53% win rate. And you're going to have one more trade entry model. For example, these 10 criteria combined together, which have 40% win rate. And you're going to gather data about 2 or 3 entry models. So this is your first entry model. This is your best entry model that has 53% win rate. You're going to take these setups. You're going to take these 10 criteria combined together. Anytime that when you see this on the charts, you're going to have the second entry model, which will be this one, these 10 criteria combined together. This will be your second entry model. For example, you're going to have one more trade entry model, which will be 9 criteria, and these 9 criteria from the 100 trades you gather data from, you're going to have like 30% win rate. This will be your third entry model. So you're going to create entry models for yourself. Your best entry model, which will take anytime when it appears on the chart, your second entry model, which is a good entry model, and your third entry model, which we are not really sure in, but it still works because it's strong combined together and has a relatively high win rate. So you're going to gather data about entry models. You're assembling entry models for yourself. Okay, this is the second step, right? So create a plan, backtest the plan, and third, create entry models. So these will be your entry models. Okay, what can you do when you have all of these? No, this is not a straight way down to FTMO. No, you're not going to start the FTMO challenge. No, you're going to complete much more steps before you start an FTMO challenge. So fourth step is, okay, practice in live. You have to practice in live trading. You have to train your eyes, not just in backtesting, because, you know, backtesting is much, much easier than live trading because, you know, you just play the candles and you can play like 3 hours of candles in 1 minute. So it's not really relative. Of course, backtesting is really fucking helpful. Backtesting will actually make a fucking beast out of you in trading, but that's not the best way to gather data. Of course, when you are not live trading, you have to backtest because that's the best way to gather data when you're not live trading. But from live trading, after backtesting, you have to gather data too. So you're going to gather data from live trading. And no, you're not going to start, for example, a 50K real account. You're not going to top up your account by 100K. No, you're going to start with a demo account. You're going to start with a demo account, which you will treat right. You will do the exact same thing on this demo account like you did on the, for example, backtesting account or at your backtesting. So you have to test these 3 entry models that you have, or 4 or 5. I don't know how many entry models that you have. I have like 4, 5, or 6 entry models. So you're going to test these entry models on live trading. In live trading, you have to test these entry models in live trading. So you test these in live trading first on demo, right? First, you test these on demos. You gather data once again, for example, like from 50 trades from the first entry model, and you will see that this will be the best entry model that had a 53% win rate in backtesting, right? So this is the first entry model that had 53% win rate in backtesting. So now you're going to gather data in live trading about these criteria. So same 10 criteria combined together in live trading. You're going to gather data from 50 trades, for example, or you can gather data from 100 trades. Once again, it's up to you. The more data you have, the more the better the trading plan and entry model will be. So 50 trades. From these 50 trades in live trading, now you're going to have 25% win rate. So your win rate actually halves, right? So in backtesting, you had 53% win rate, and in live trading, you're having 25% win rate, which is still really good. With 25% win rate, you can actually achieve really fucking good things. So for example, in July, I had like 21 or 22% win rate, and I just collected like 30-35 risk-reward ratio. So from 20% win rate, I collected 30-35 risk-reward ratio. So just imagine collecting 30% and 30 risk-reward ratio in a single month. That's enough to pass 3 challenges and 3 verifications, right? So you don't need higher win rate than 25%. Of course, the higher the win rate is, the better the entry model and strategy will be, but 25% win rate is perfectly enough. If you have a 25% or 30 or 35% win rate in like live trading, then you can start to test this entry model or entry models that have at least 25% win rate in, let me just delete these, in the FTMO trial account. FTMO trial. So this is where things are getting interesting, because you have to complete 3 FTMO trials in a row in order to apply for a real FTMO account. So you have 3 FTMO trials in a row. Okay, 3 in a row. You have 3 FTMO trials in a row. Okay, why do you have to complete 3 FTMO trials in a row? Simply because 3 FTMO trials equals a simple challenge plus verification on the real account. You know, in trial, you have to collect 5% in total net growth, right? So you have to collect 5% profit in FTMO trials. And if you just combine 3 trials, that will be 15%, right? And I don't know if in the real challenge on FTMO, you have to collect 8% or 10%. I believe you have to collect 10%, right? Correct me, please. You have to book 10%.
Yes, 10% on the challenge.
So you have to book 10% on the real FTMO challenge. So you're booking 10%, that will equal 2 trials. So if you can complete 2 trials in a row, then you can complete the challenge. And if you can complete 3 trials in a row without failing one, then you'll be able to complete the verification too, because the verification is 5%. So it will equal 50%, right? So you have to complete 3 FTMO trials in a row to apply for a challenge. If you can complete 3 FTMO trials in a row without failing, then more likely you will be able to complete this FTMO challenge and you'll be verified, you'll be a funded trader more likely. But of course, the more trials you complete, the better the challenge will be, the better the preparation progress will be. So yeah, these are the steps that you have to do before you apply for an FTMO challenge. And okay, you just completed 3 trials in a row. Perfect. You can apply for a challenge. If you feel yourself at that level when you can apply for a challenge, then you can apply for a challenge. And you're not going to apply for a 200K account, okay? This won't be your first account. No, forget about the 200K. First, just do me a favor and don't waste your money. Just don't waste your money. Simply focus on the 10K. If you can complete this 10K, then you can use the profits of the 10K to buy. So from the 10K, you're going to make money. Let's assume you're going to get a actual withdrawal. You're going to have payouts. And from your first payout, you can actually buy a higher 200K or 100K account, which you will be able to complete once again. But if you can't complete this 10K, then you won't be able to complete this 100K. And if you're going to fail the 100K, you're going to lose like $500, right? It costs $500. And the 10K, I mean, the 10K costs like, I don't know, $80 or $100. So just actually save yourself money. You don't have to apply for the higher challenge. You don't have to apply for the 200K. Just apply for the 10K if you completed all of these steps right here. And if you can complete the 10K, then more likely you'll be able to get payouts from it. If you can get payouts, then you have to prepare more. You have to practice and backtest more. Then, of course, you're going to complete these steps again. You're going to do all of these 5 steps again, and you apply for one more challenge. Now you completed both of the phases. You have a funded account, and right now you gained a payout, right? You have a payout right now, and from this payout you can apply for a 100K challenge. okay, you're starting the 100K challenge and you're failing this challenge. Why? More likely because you're psychologically, I don't know how to say this. Okay, I'm having a small stroke. Sorry. So your psychology isn't right. Okay, you have to work on your psychology. Perfect. You're going to complete all of these steps again, blah, 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 going through once again. Now you can complete the 100K. But this is really a step-by-step game, and this can be happening in 1 month or 1 week. This can be happening in 1 week. This can be happening in 1 month. This is like a 6 to 12 months progress. To complete the FTMO and to complete and be funded on a 10K account and to get payouts and to complete a higher account takes around 6 to 12 months. This isn't a 1 week or 1 month progress. It takes lots of time, or even more than 12 months, but actually I can guarantee if you complete these steps, you will be funded in 12 months. And we just had great examples for this. Mainly all of the funding members in this community became funded in like 6 months. And no, of course, you can pass the challenge. You can pass the challenge after joining this community in 1 week. But to keep that challenge, you have to work on your psychology. You have to complete these steps. Of course, you can pass the challenge anytime, in 1 day, in 2 days. But to keep that account and to consistently make money on that account, you have to complete these steps and you have to train your mental for this. And for example, the best example in this community for this is Nabev. Nabev, are you here? Let me just search. No, he isn't here. Okay, so you know, mainly most of you guys know Nabev, right? He's been part of this community for like almost a year now. And he was practicing for 6, 7, or 8 months. And after he gathered enough data about the entry models, about the plan, about anything that I drew here, after he gained enough data, he started to apply for the FTMO trials. After he completed the FTMO trials, 3 in a row, he applied for a Roya challenge. And he went through all of these steps. And look at him now. He's making consistent payouts month by month, week by week, and he's making lots of money from Forex trading. Why? Just because he completed all of these steps. And yeah, I had a one-on-one session with him. Actually, we had a one-on-one session, and I just explained this whole flow chart to him and some more tips. And after that, he started to be serious in trading and started to concentrate more on trading and these progresses. And he became funded actually. And yeah, that's what it takes. That's what it takes. It isn't an overnight success story. It is not an overnight success story. You have to dedicate time to Forex trading. And yeah, it might take up to 6 months. It might take 3 months for you because, you know, every individual's learning process is shorter or longer for each individual, right? But you have to go through these steps. Without these steps, you will be failing. You won't be funded. You won't be making money. These steps are really, really important. And yeah, technically, well, that's the flowchart that I can say, that I can show about the FTMO, how you can prepare for a funded trading platform challenge. And yeah, any questions about this?
No, all clear, Marcel. All fine. I didn't follow that. I already submitted for my challenge, but I didn't follow all of that. Maybe the 5th point I didn't follow. The first 4, yeah, I'm already doing.
Okay, this is actually the 5th point is the most important point. This is really, really important. If you can complete 3 trials in a row, then you'll be able to complete a full funded account. If you can complete a full funded account on a 10K, then a 100K won't be a problem. But you know, psychological is very, very important. Yeah, I can't say this word. I know why can't I say this word? But psychology, yeah, psychology hits different when you're actually, for example, you're completing a 10K accounts, and you can complete 3 FTMO trial 10K accounts in a row. Then you apply for a 200K challenge. Of course, psychologically will hit different because you're seeing much bigger numbers than you used to before, right? On the 10K. So yeah, these are the steps you have to complete to apply for a challenge. And first, apply for a 10K challenge. Don't rush. Don't rush the progress, actually. Take your time. You will be there. If you don't rush the progress and you're enjoying the progress and you're actually having fun while you're making these challenges, gathering data about entry models, creating a plan, etc., then you'll succeed in the market. If you're trying to rush because you'd like to make money, and you're saying to yourself that, okay, I want to be a millionaire by the end of this year. No, you're not going to be successful. You're going to be in the 99% of the traders who are failing. If you want to be in the 1% who's actually making money from Forex trading, you have to enjoy the progress. You have to love what you're doing. If you're enjoying what you're doing, if you're enjoying all of these steps, then you can actually be funded and make money out of it. That's all. And of course, the end goal is not the 200K funded account. That's not the end goal. The end goal is to make your own capital, own funded capital, funded by yourself. So, for example, you complete a 100K account or a 200K, and you're going to fund your own capital from the payouts from this 100K account. You're going to build an own capital, and for example, in a year, this own capital will reach 50K or 100K, and you'll be able to trade on your own capital, and you don't have to rely on these shitty prop firms, because prop firm is a scam, actually. That's it. So yeah, guys.
Marcel,
Yes.
can you let your co-coach in, please? He's kicked out.
Sorry, I couldn't hear because your voice was lagging.
Can you let your co-coach in?
Yeah.
Session? Thank you. He asked on this. Thank you.
Thank you for letting me know.
Come back.
Where you went?
My internet goes wrong, I think.
All right. Okay, let me just read this. I passed the first one, just started the second one. Yeah, Michael, just keep going, keep grinding, keep hustling. There's a chance that you will fail the second one. Then what? You're going to start with the first one once again. Then you're going to come to the second one. There's a chance you will fail with the third one. Then what? You're going to start with the first one once again. It just takes time. Making money from Forex trading can't be happening in 1 day or 1 week. Excel file for data gathering will be late. Actually, there is Chain Markets. I believe I just made the backtesting file. But I will update it. I will update it and I will post it for you. Okay, guys, I will create a really fucking good backtesting file with diagrams and shit like this. Okay. And you'll be able to track your backtesting data into that Excel file. So yeah, fuck it, I will create it. It will take up to like 1 or 2 weeks. I just want to make it really fucking good looking and easy to understand. So yeah, I will just create it for you guys. Okay, second question, because yeah, it's 2:30, so New open soon. No questions about this platform game? Everything was understandable? You're going to, okay, let me just ask. Everything was understandable? Okay, yeah. Usually when I'm asking these questions, I'm just drinking few sips. Okay. So second topic. Let me just read. It was a Pew's question. Rafael, actually there are, I believe, 4 or 5 weeks of data available for TradingView. So you can go back to like 5 weeks. And those 5 weeks are perfectly enough to gather data. So second question, because we have to be quick. When I have a structure of 15 minutes, I'm just reading Pew's question, and I will copy it here. Oh no, this looks shitty. Yeah, this is fucking shitty. Okay, never mind. So I'm just copying his picture, and actually this question is really good and really simple at the same time. So this is a good question, but a simple one. 5 weeks don't have 100 trades. That's perfectly right. But you're going to have more and more days when days are passing by, and you're going to have 100 trades. So here's the question. Pew asked that this is structure right here, 50-minute structure, right? And the question was that if price changes character here to the downside, then the main trend will change and shift to bearish. And the question technically is that, do we have to wait for a strong change of character here on the 50-minute zone and expect short trades on this zone, on the supply zone that has changed character here to the downside or somewhere around here? I don't know where the supply is. So let's assume here's a supply zone that has caused a change of character here to the downside. And the question is that, do we have to wait for a strong change of character here on the 50-minute zone because trend just changed to bearish? Or we just simply wait for a pro-trend trades because the overall swing structure is still bullish? This is a really, really good question. Okay, so let me just illustrate it. I will just keep this on my chart. So let's assume that the higher time frame trend is bullish. Okay, so this is the 50-minute trend, but the 4-hour trend is bullish too. So the 4-hour trend is printing higher highs and higher lows. Okay, so this is the 4-hour trend. This is the 4-hour structure. It's just creating and printing higher highs and higher lows. So higher lows, higher highs, higher lows, higher highs, higher lows, higher highs. So the structure on the 4-hour is bullish. Okay, one simple leg, for example, this one will be will look like this on the 50-minute chart, right? So this is the 50-minute chart according to the 4-hour chart. Okay, if the higher time frame is bullish and your chart is doing something like this, and you can decide that if it's a change of character to the downside or if it's not a change of character to the downside, and you can still expect reaction on this 50-minute zone, there's one simple way to decide if it was a character changing zone or not. You have to take a look at this retracement point. If this retracement point right here, so after price retraces here to the downside and creates this change of character, question mark. So if price creates this change of character to the downside from a retracement point, which is a 4-hour zone, then it will be a character changing zone to the downside. So for example, price is coming up on the 15-minute chart, right? Price is coming up and it retraces on a 4-hour supply zone here. And after this 4-hour retracement, price creates this change of character. So here will be the next demand zone. Okay, here will be a character changing movement to the downside. Okay, so if price creates this character changing movement to the downside on a 15-minute chart after it coming from a 4-hour zone, 4-hour supply zone, then it will be counted as a character changing movement. And you have to wait for a strong change of character on this zone, on this 15-minute demand zone, if it's coming from a 4-hour zone. If it's not coming from a 4-hour zone, so there's no supply tab at this region, price just simply retraces in the middle of nowhere. If price retraces in the middle of nowhere, then you have to wait, a strong 15-minute change of character. So if price changes character here to the downside, you can still wait for a simple change of character entry on the 1-minute chart here on this demand zone. But if price breaks below this zone, then on the next demand zone, you will have to wait for a strong character changing entry here, okay? So if price, this scenario only is being alive when price retraces in the middle of nowhere without the supply tab, without the higher time frame supply tab. If there's no higher time frame supply tab and price retraces, what do we know about this scenario? That this retracement to the downside will more likely a liquidity collecting region. This will be liquidity because there was no higher time frame supply tab. If price reverses without the higher time frame supply tab, for example, in this scenario, then I've told you this several times, this will be a reversal in the middle of nowhere, which will be counted as a liquidity. So this will be the liquidity collecting movement, and more likely this supply, which has caused the character changing movement here to the downside, will be liquidity collecting area. Sellers will be trapped here, and these sellers will be liquidity for the upcoming longs. But if there's, once again, if there's a higher time frame supply tab here at this region on the 4-hour chart, then a simple character changing movement will be enough. And this isn't a reversal in the middle of nowhere. This reversal being caused by a 4-hour supply. So more likely it could be a trend reversing movement and not just a reversal in the middle of nowhere. So once again, starting from the first example, if price retraces on a 4-hour zone, 4-hour supply here, then a simple character changing movement on the 15-minute chart is enough. And after this happens, you have to wait for a strong change of character on the next recent 15-minute zone here. Okay, if price retraces in the middle of nowhere, then you still have to wait for a simple character changing movement here because the higher time frame trend, as you remember, is still bullish. Okay, So we're waiting for a simple character changing movement because price retrace in the middle of nowhere. So it will be liquidity for the upcoming longs, and the trend will be more likely continued. And this was just inducement for the deeper area. Okay, if price retraces in the middle of nowhere without a higher time frame supply tap and breaks below this low point, then after on the next recent demand zone, below this demand zone, of course, you have to wait for a strong character changing movement, because strong change of character on the 15-minute chart happened here and here. So more likely it will be a change in the trend. It will be a change in the trend even without a higher time frame supply, because without a higher time frame supply, that price could change character strongly on the 15-minute chart. So these are the scenarios for this example that Pew just drew. And removing these, removing. Is it understandable? It's basically a pretty simple concept. Come on, guys, just draw my chart. Is it understandable or no? I want everyone's opinion. I can see 54 drawings on my screen. Okay, so it's understandable. Stop it, please. Stop drawing. Okay, so that's it. That's it. Technically, it's a really, really simple concept. And yeah, I just explained it several times, right? I just explained it several times before, but I didn't collect it in an educational topic. I just included it in a, for example, recap video or previous webinar, but I didn't collect it in an educational topic yet. So here will be an educational topic which will show you how to use it. If it retraces on a 15-minute supply, we count it as a retracement in the middle of nowhere. Actually, I would only say a 4-hour retracement. A 4-hour zone retracement will be good. If a 15-minute zone retraces price, just like I drew, I believe that won't be enough. That won't be counted as a higher time frame zone, because we are talking about the higher time frame trend change, right? So if price creates a strong change of character, this is the 15-minute chart, and this is the 4-hour chart, and this movement is this leg of the 4-hour chart. So if price creates a strong change of character here to the downside, then more likely this overall higher time frame trend will be changed to bearish down to this less recent 4 hours region, right? So the 15-minute trend will be changed to bearish if price retraces on a 4-hour zone somewhere around here. But if price retraces on a 15-minute zone here, of course that could retrace price to the downside and could lead to an actual bearish order flow down to this 4-hour demand zone again. But it's not as strong as a 4-hour zone retracement. So I will only count this rule for the 4-hour zone retracements. All right. So we have to start the top-down analysis. We have to start with the top-down analysis because in 50 minutes, the session will be opened. So let's just start. Let's just start on the 4-hour. Okay, so what can we see here? Let me just drink a sip, sorry. What can we see here? Let me just read the chat, sorry. Okay, no questions. So we can see that price just simply printed the main order flow movement once again, as I explained it in the weekend forecast video. I just showed you in the weekend forecast video that this pattern is being continued over and over again. This is daily chart, daily strong movement, corrective pullback on the daily, retracing to the supply, strong movement, corrective pullback to the supply, strong movement, corrective pullback to the supply, strong movement. And the current strong movement is happening. So we can expect further drop to the downside, and we can expect further breakout structures and deep mitigations. Of course, it's a little bit riskier and extremier situation because, you know, price just broke below the 1.000 and price is currently staying below the 1.000 psychological level for like days now. So, and yeah, one more extremier situation is that this demand zone here is from 2002, and technically these demand zones will be from 1090. So yeah, it's a bit riskier and extremier. But you know, this is what the daily chart is showing us. It's just showing that price is creating strong bearish movements, retraces to a supply, bearish movement, retraces to a supply, bearish movement, retraces to a supply, bearish movement, with breakout structures, of course. So this is the higher time frame pattern that we can see on the daily chart. And if I'm switching to the 4-hour chart, the retracement has happened here, right? Here was a retracement, liquidity building up, slow movements, liquidity gets swept into the higher time. I mean, it wasn't a higher time frame supply, it was a 50-minute zone even. So liquidity got swept into a 50-minute zone, changed character on several places, even the 4-hour chart. Here was a 4-hour change of character after this 50-minute zone tap, and started the huge bearish order flow, pro order flow leading movement, which was, as you remember, the huge bearish movements, breaking structures to the downside. And yeah, I'm expecting further drop. I'm expecting the break of this demand also. I'm expecting more bearish movements. And this is the higher time frame. This is the higher time frame perspective. We know that price is showing us extremely fucking bearish intentions. We can see extremely fucking bearish intentions over and over again. Okay, if I zoom in, we will see that price broke below several demand zones. For example, here was a demand zone that was just below the liquidity line here. This couldn't give any reaction and reversal to the upside. Price just simply flipped this zone from this zone technically. And yeah, if I zoom in, you will see that this was the flip zone. This was the 4-hour flip zone that flipped this overall demand zone right here. Because, you know, this wick below couldn't close below. And from this candle, the huge inefficiency started after this price retraced to this 4-hour less recent flip zone. And after retracing up to this 4-hour flip zone, price reacted on this flip zone and started to continue the overall bearish movement once again. Okay, so this has happened yesterday. Price perfectly closed inside of the 4-hour zone, didn't even wick below this zone. And yeah, what can we expect from here? What can we expect from this situation? We can expect that price will continue the structure breaking movement to the downside. We can expect the bearish order flow continuation. This is on the 4-hour chart, right? This is what we can expect in the 4-hour chart. But of course, on the 15-minute chart, we'll be able to find good entry opportunities, combined with the 1-minute chart, of course. We'll be able to find good entry opportunities to ride this bearish order flow to the downside. And technically, on the 4-hour chart, there's nothing more to explain because it's just bearish. And the overall analysis for the 4-hour chart is just bearish. If we could say a pro analysis, then we could just simply say it's bearish. And that's the best analysis that you can actually build for the 4-hour chart or any possible time frame. That is just bearish. And we have to go with the flow. We have to go with the flow, and we have to be just bearish. That's all. We will find good entry opportunities. Of course, after this 4-hour zone mitigation, we have to see a 15-minute character changing movement. If price changes character here on the 15-minute chart, we'll be able to enter in a short movement, of course, with confirmations on the 15-minute zone that causes the 15-minute change of character, etc., etc., etc. This is what you can see on the 4-hour chart. And yeah, that's it. That's it technically. There's no point to create further analysis for the higher zones. What if price reverses here and what if price mitigates this zone? No, there's no point. It won't happen on this week. This zone won't be tapped on this week. So it's actually pointless to create any further perspective, any further analysis, because we have to focus on this region now. We have to focus on how can we catch the bearish order flow, which will print us 100 risk reward ratio trades. Because yeah, catching 100 risk reward ratio trades is simply simply easy. It's fucking easy to catch 100 risk reward ratio trades in this trend. Just look at this trend. Just look at this trend. It's really fucking easy to catch high risk reward ratio trades. All you have to do is hop in a short trade and hold as long as you can. Okay. So the main plan for the 4-hour is to catch a bear trade, actually. We have to catch a bear trade. We have to find a good 15-minute zone somewhere around here, which causes the 15-minute change of character somewhere around here. And if we can catch that 15-minute zone or 5-minute zone, or we can simply find any good 15-minute/5-minute zone where you can actually catch a trade on, and with a 1-minute confirmation, we can enter in a trade and ride the bearish order flow. This is the plan for today. This is the plan for this week. This is what we can see. And remember, we had the same plan right here at this region in June. This was June. We had the same plan. I remember hosting the exact same webinar. I have déjà vu feeling where I said the same thing, that if you can find a good 15-minute zone at this region or a 5-minute zone, and price taps this 15-minute/5-minute zone and prints 1-minute character changing movement, then enter in the fucking trade and hold it as long as you can. Hold on dear life. And this is the same plan that's happening right now. If you can find a good 50-minute/5-minute zone, wait for supply zone, wait for a confirmation, hop in a trade, and hold it as long as you can. That's it. Okay, but we have to search for good entry opportunities on the 15-minute chart. Yeah, I will record the video about yesterday's trade idea here, which have been missed by few pips. Price retrace on the full body and not on the 50%. I will record this video for you guys, don't worry. And yeah, more likely it will be up today. I will post this video today. More likely I will record this video after this webinar. So yeah, turn the notifications on the recap video channel. I will be posting it there. And let's see what happened here. So here was the 4-hour zone, right? Price mitigated this 4-hour zone. And after the 4-hour zone mitigation, it just reversed to the downside. I don't know if you remember for yesterday's markups, I just sent you that price has a chance to react on this flip zone, 15-minute flip zone, or it has a chance to react on this 4-hour zone. If any of these zones can print a confirmation for us, then we'll be able to ride the bearish order flow to the downside. This 15-minute zone couldn't print. It was just simply broken with one inefficient push to the upside. But after the mitigation of this zone, there wasn't really a good entry opportunity, because after a 4-hour zone mitigation, we have to wait for a 15-minute character change movement, which hasn't happened here at this region, and session just closed. So this was the only trade opportunity that has happened yesterday, and it has been missed by us. Actually, some of you guys called it because you did set a limit order on the full body and not on the 50%, but it is what it is. We missed it. Mainly, most of us missed it. So, okay, let's just focus on this region. Price mitigated this 4-hour zone, right, and printed a strong reaction, really fucking strong reaction, coming up, swept some liquidity from this region, coming down with a huge fucking weak rejection and inefficient candle to the downside. And there was some 5-minute character changing movement here to the downside and mitigation and continuation, but we don't care about this movement because we have a rule where we have a 4-hour zone. We have to wait for a 15-minute change of character. So this wasn't a trade opportunity for us. Okay. I want you to mark the last recent 15-minute zone that we care about. I want you to mark, sorry, don't mark anything. Stop. If you raise your hand, okay, well, you know the rules already. So, well, sorry, not well. Well, yeah, technically, this is the last recent zone, but not correctly. This is last recent zone.
But we have liquidity around below it.
You didn't see this week because, you know, it was just being blinded by the lots of drawings here. But the weak zone in this case is the correct demand zone. And price seems like it just broke below this demand zone, or just weak below this demand zone. It didn't actually body break this demand. It just simply weak below. And actually, it didn't sweep any liquidity because the liquidity is below this demand zone. And this sweeping movement seems like a sweeping movement, yeah. It literally seems like a sweeping movement, but there was no liquidity below this demand zone. As you can see, it's just a simple bottom. So the liquidity is below this demand zone. And this sweeping movement, sweep. So it technically wasn't a sweeping movement. I will consider this as a break because it didn't sweep liquidity. It just simply wick below the zone. And did put more liquidity on the table. As you can see, this is the second bottom, or this is more liquidity for the upcoming shorts. Just look at this liquidity run line here. Look at these touches. Look at this new liquidity right here. Look at this new liquidity. So this break / wick below this demand zone did put more liquidity on the table for the upcoming shorts. Okay, so technically, okay, let me just, I don't want to remove this drawing, sorry, because I will just record the video and it takes time to put these drawings back on my chart. So yeah, I will just keep this drawing, sorry for this. I don't know. Okay, so upcoming possibilities for the 15-minute chart. What could happen in this session? Since there's lots of fucking liquidity below this demand zone and below this price action, there's lots of liquidity here, lots of liquidity here. I won't even mark it because we can just simply see it and it just distracts us. What could be the possible scenario for this session? Technically, if price reverses up to a 50-minute supply zone or a 5-minute supply zone, this is the 50-minute supply that wick below the demand zone, as you can see. And if we consider this as a demand zone, which is not correct, it has been broken by the closure, but we will consider this as our demand zone. Never mind. So if price retraces up to this supply zone, comes back up to this supply zone, and prints a change of character entry here on the 1-minute chart, we'll be able to enter. And we'll be able to target the last point of liquidity here and the weak low. because this is a weak low point, right? Why is this a weak low point? If you raise your hand first, you can answer this question. Why is this a weak low point? Michael, please.
It couldn't be the 4-hour demand supply.
Exactly, thank you. This is a weak low because it couldn't take the last recent supply out. So if you can catch a trade here with, for example, like, let's count this 2.5 pips, and we're holding it down to this weak low point, it will be roughly around 10 risk-reward ratio. So if price creates an entry opportunity here on the supply zone, this 15-minute supply zone, we can target this weak low point for roughly 20 risk-reward ratio, which will be a really good trade. And this is a really, really good plan for this session because technically this is a really high chance to happen. Seems like on the lower time frame, liquidity is being formed here, as you can see. I will just mark it and see it in the lower time frame. So if price retraces up to this supply, sweeps the liquidity, creates a change of character entry, we'll be able to enter in a trade. But there's a chance that there will be a 5-minute supply below this supply. And if there's a 5-minute supply below this 15-minute supply, and if the 5-minute supply gives us a reaction and a confirmation, we'll be able to do the same. Let me just read the chat. There is a trend line above. We don't care about this trend line currently. Bro, isn't all about substructure after a 4-hour tap because there was no low break in the 15-minute. You know, after this huge fucking movement, just look at this. Let me just count how many pips it passed by. 100 pips passed by. 100 pips passed by between this low and this high point, and the low point being broken with weak. And this low point being broken with weak, and there was no liquidity below this zone. So this zone isn't part of the liquidity. So we can technically consider this as the change of character. So we can consider this as the character changing movement. And considering the higher time frame, trading markets, sorry, you have to understand the order flow. Basically, you have to understand the order flow because simply look at the higher time frame order flow. Look at the higher time frame order flow. Look at the higher time frame order flow. What's this order flow showing us? It's showing us that I'm extremely bearish, right? And if there's a small indication that, for example, the 15-minute chart is turning to bearish after 100 pips push to the downside, and there's a break of this zone with a weak, not body closure, but a weak closure, then we'll be able to look for cancellations on the supply zone. Of course, there will be a chance that the supply won't give us shit, and it will just simply break to the upside and create a flip scenario. Now, if this happens, we'll go long. But right now, every single time frame is showing us that I'm bearish. I want to go short. I have to create short movements. Focus on me. I'm bearish. Don't get lost in the lower time frame. Don't get lost in the lower time frame noise. Focus on the higher time frame intentions. Higher time frame intentions are much stronger than lower time frame intentions. And the higher time frame intentions are showing us that I'm bearish. So yeah, if this supply prints as a confirmation, then we'll be able to take a short trade. If this supply can print as confirmation and it just simply flips this supply, then we'll be able to take a long trade on the flipping zone right here. If this supply gives a reaction, but price leaves the liquidity to the above, here's liquidity, of course, here's liquidity. Liquidity is everywhere. If price leaves this liquidity and reverses and creates a character changing movement, then we'll go short once again. And these are the plans for the 15-minute chart. And of course, there will be more plans if price can't retrace up to the supply zone and it just simply goes to the downside and breaks structure. Then if it breaks structure, then we'll be able to mark the new supply zone out. We'll be able to wait for a reaction on the supply zone and do the same as on this supply zone. But of course, there's liquidity. There's loads of liquidity here. 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 Here, everywhere is liquidity, right? Everywhere we can find liquidity. There's liquidity everywhere. But look at the structure intentions. Look at the structure intentions. Just because there's liquidity doesn't mean that price has to necessarily sweep this liquidity. The structure intentions are showing us that I'm extremely bearish. Grab me and push me by the ass and ride me to the hell. Because it's showing us that I'm bearish. Of course, there's liquidity. Of course, there's liquidity. Of course, there's liquidity. But this liquidity is being built up for deeper price action regions, for deeper demand mitigations and reversals. And this liquidity will be grabbed after price reverses to the upside. A reversal won't happen to the upside randomly somewhere around here. This liquidity is there for a reason. It's there for a reason. It's there for the higher time frame reversal. If price reverses on the higher time frame, for example, on the daily, then this liquidity will be the fuel to the upcoming shorts. Price won't reverse in the middle of nowhere just to collect this liquidity because it has enough power to break structure continuously, right? So it doesn't have to collect this liquidity. It will collect lower time frame liquidity. There were lots of lower time frame liquidity collections over and over again. And that lower time frame liquidity collection is perfectly enough for price to continue the main order flow movement. You have to understand structure. You have to understand how structure works. And I'm just showing you in every single webinar how structure works. Higher time frame intentions over lower time frame intentions. Focus on the higher time frame. If every single higher time frame is showing you that I'm bearish, don't go bull. If every single higher time frame is literally showing you the signs for the bearish trend continuation, and not just showing you signs, it just literally puts the gold into your face that press the sell button. Every single higher time frame is showing you the bearish intentions. Look at this. Look at this. Look at this. If these are showing you the bearish intentions and you can recognize the pattern, which I actually did for you, you don't have to recognize the pattern for yourself. Here's the pattern. Here's the pattern. Same pattern continues over and over again. Supply reaction, supply reaction, supply reaction. Bam, bam, bam. What can you do in this situation? Find a good fucking sell opportunity and ride it as long as you can. And if there's a small sign for the continuation of the bearish trend on the 50-minute and the 5-minute, just grab it and be in the sell. Why would you look for a long here? Why would you look for a long here? Of course, here was this huge movement caused by the news. News candles are always being broken, right? We learned this, that news candles are always will be broken. And the purpose of this huge candle was to collect liquidity and to actually, you know, that's what I was talking about when I said that price has to collect lower time frame liquidity. Lower time frame liquidity, bam, continuation, expectational break of structure. More likely after this break of structure, after this break of structure here, if price breaks structure here to the downside, this liquidity will be the fuel for the upcoming shorts. Again, there will be a 4-hour zone, sweep, bam. This is how the structure works, right? So price won't just reverse here in the middle of nowhere to collect this liquidity. It will be a reversal point after a break of structure. And after a break of structure, price will sweep this liquidity, tap in a 4-hour zone and continue the main order flow movement. So just simply focus on structure. Don't confuse yourself with the noise. Focus on the higher time frame structure. So yeah, that's about the 15-minute chart. We are waiting for this zone to be tapped, blah, 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 blah. Here's liquidity, here's liquidity. We'll be able to look for shorts if the zone is being tapped. Switching to the 5-minute. On the 5-minute, there was a clean break of this 15-minute zone. And as you can see, this zone wasn't part of the liquidity. This was that 15-minute zone right here, which is not part of the liquidity. This zone is not part of the liquidity. There's no liquidity. This is just a simple bottom. And if this is a simple bottom, then we can count a 5-minute break as a breakout zone, actually, because it can be a liquidity sweep because there's no liquidity needed to be swept. There's no liquidity that has been swept here, so it can be a sweeping movement. I just explained it several times before on the webinars. Once again, it can be liquidity sweep if there's no liquidity. I will count this as a break because price is showing clear intentions that I'm bearish on every single time frame. Isn't it part of the trendline liquidity, or we can count the equal bottoms? More liquidity has been created. More liquidity has been created with this movement. More liquidity, more liquidity, more liquidity for the shorts. Everything is liquidity here. This is liquidity. This is not real structure. This is a liquidity, basically a liquidity pool that will be swept. And when will this liquidity swept? If price collects liquidity from the upside, taps into a higher time frame zone, then this liquidity will be swept with this movement, and it lines up with our overall higher time frame structure. And this liquidity will be the fuel for the breakout structure here. After this breakout structure, price will reverse to the upside, come up to some higher supply. That's it. Okay. So 5-minute. See, here's the liquidity that I was just talking about. Here's the liquidity below the supply zone. Now it seems like it's forming a triple taps below this. Okay, no, sorry. I will just keep the 15-minute zone and mark the 5-minute zone. So we have a refinement on the 5-minute chart, and all signs are leading up to this supply. So plan for today is pretty fucking simple. If price reaches this supply here, and prints a character changing movement to the downside, we'll be able to ride the short order flow. If price reaches this supply and flips this supply and closes above this supply, we'll be able to take longs from the flipping demand zone here. If price reaches this supply but sweeps the liquidity, it can close above, blah, 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 and reverses to the downside. And for example, sweeps the liquidity, reacts on this demand zone, flips this demand, we'll be able to take shorts to the downside once again, because we will know that this was just a liquidity sweeping movement, and this demand was flipped, we'll be able to take shorts from this zone. Fourth plan, if price breaks structure here to the downside, breaks structure here to the downside, so here, and it retraces up to a new supply, we'll be able to do the same here on this new supply. That's it. That's the plan for today. Nothing else. This is the plan for today. Wait for the indication of this higher time frame supply, or technically wait for a indication of any higher time frame supply, wait for a confirmation on that higher time frame supply, and that's it. And there's no need to predict that this was a break, or this wasn't a break, it was a liquidity sweep, blah, blah, blah. There's no need to predict. There's literally no fucking need to predict if it was a break or a sweep, or just price is just simply playing around. It will be decided on this zone. If this zone prints as a confirmation, and there will be a good confirmation, this was a break, and more likely it was a break and not just a sweep, and more likely we'll be able to continue the short movement down to this weak low point. If it wasn't a break but a liquidity sweep, and if price reverses here to the upside, then we will go long. There's no need to predict. All you have to do is reacting. All you have to do is react on what price is giving you. And right now, price is showing us that here's the break of this demand, or the sweep of this demand. You don't know. But here's this supply that has liquidity below it. Higher time frame is extremely bearish. Wait for a supply tap, wait for a confirmation. If that happens, you go short. If this sweep and the confirmation can't happen, and this supply is being flipped, you go long. That's it. If the liquidity is being swept and reverses, you go short. If price goes to break structure here to the downside and reverse on the supply, you go short. That's it. You don't need to overcomplicate things. Focus on the higher time frame intentions, focus on confirmations, focus on reactions. So that's it technically, guys. Arash, what's your question?
Marcel, how about the upper supply zone in 15 minutes?
We don't care about that supply. There are loads of supply zones on the 15-minute, as I explained minutes ago.
Okay, thank you.
Here's supply, 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 everywhere supply zones, right? We can find supply zones.
I mean this.
Of course, there's a chance, but there's a chance that price will come up to this supply too. There's a chance that price come up to this supply too. We are focusing on the less recent supply, and this is the less recent supply that has liquidity below it. So this is a really, really valuable supply zone that we care about, right? Because we have liquidity below this supply zone. This is the less recent supply zone that initiated this break of the demand zone or sweep of the demand zone. We don't know yet. This is a supply zone that has swept liquidity here on the buy side. This is a supply zone that has triple tops below it. So more likely this supply will be the one that will hold price. If it won't be able to hold price, then that's it. Now we will see how price will react on this supply zone. But more likely if this supply breaks, then this supply will be broken too, because this supply here is not as valuable as this supply. Because simply just, as I said, track your criteria for your zones too. This supply has what criteria? It couldn't even break the structure here to the downside. It couldn't even take out this demand. It couldn't even sweep liquidity. So it has only one criteria, that it has inefficiency. What did this supply cause? It caused the sweep of this liquidity. It caused the break of this swing structure. It caused the break of this demand zone, flip this demand zone. It has liquidity below. It has huge inefficiency. So this has like 4 or 5 criteria. This has 1 criteria. Which one is stronger? This one is stronger. Track your criteria on everything. That's why I created criteria.
Thank you, brother. Thank you.
No problem. That's why, yeah, technically that's why we are waiting for confirmations, and that's why we are waiting for literal higher time frames or confirmations, because we don't need to predict shit. Well, yes.
Just one question. I already got the scenarios. The lower demand, which already, let us say, it is broke or sweep. We are not sure 100% about that.
Yeah.
It is change character right now on the 1 minute. Can you go to the 1 minute chart? Can we consider this as change of character? It's like broke multiple supply zones, and we are waiting to go down to
Let
one
me
of
just
the
ask
demand.
you. Yeah, let me just ask you an honest question.
Yeah, tell me.
After this huge bearish pressure on every single time frame.
No, without continue.
Okay.
But just let us assume for like, let us assume.
I
that
will say it
will go
anyways.
down.
After this huge bearish fucking pressure on every single time frame, would you be that stupid to open a long position somewhere around here? Just tell me honestly, why the fuck am I here? Okay. So yeah, no, don't open a fucking long, please. Don't open a long, because I will close this membership and I will retire.
Okay.
Fuck me. So yeah, just wait for short confirmations. Just wait for short confirmations and don't play these longs. This is just liquidity too. This is liquidity building up. See, liquidity for the upcoming shorts that will be taken after the shorts. And you could say on the other perspective that here's this demand zone that change character to the upside and has liquidity above. But no, this demand zone will be broken because this is just a random shitty 1 minute demand zone that changed character on the 1 minute chart. Not even a 5 minute character changing movement happened. So wait for supply trades. I just explained the scenarios clearly, and there's it. Wait for this supply tap, react on this supply, wait for the breakout structure, react on the structure breaking zone if it forms. That's it. Wait for supply trades, wait for short trades. And if you can catch a good short trade, you'll be a millionaire by the end of the day. News in...
Marcel, I have a question.
Yes?
If the 15-minute supply is flipped, should we wait for a confirmation in the 15-minute demand that flips the supply, or we can go long in the 1 minute
Sorry. Can you just repeat, please?
Yes. If the 15-minute supply is flipped, should we wait for the 5-minute demand that flips the supply, or can we go long in the 1 minute demand that flips the 15-minute supply?
If the supply is being flipped, so if price reaches the supply and price flips the supply, then the best scenario in this case will be that wait for the 5 minute / 15 minute demand zone that has flipped this supply zone, because just simply considering the bearish pressure, it's much safer to come from the long trades than just simply taking risk trades, because, you know, I just explained that every single time frame is showing us bearish intentions. So if the supply is being flipped, you have to wait for a confirmation here. That's the safest way to trade.
Perfect. Thank you.
You're welcome. Okay, guys, so that's it. It's simple. If yeah, exactly. If 4 hour and 50 minute is bearish, we don't take 1 minute longs, because that considered as the worst counter trade scenario that could happen ever. So that's it, guys. I will just leave now and have a lunch. I will just eat something because I'm really hungry. And thank you guys for being here. I will just create the poll, as I said, about the live webinars. You know, about what will happen with the live webinars in the future. I will create the poll. And thank you for being here. I appreciate you guys and I love you guys, and see you. And sorry. As usual, I will ask for feedback for this session because I believe this was a really informational. I will just stop the recording. Sorry.